Hey, everybody. Welcome to the live session. I've got Harry on board. Harry, how are you doing?
How's it going, everyone? I hope
We
everyone's
have,
doing well on CPI day here. Um, Certainly a bullish number that we got. I think a lot of people might have been expecting at the top of the market that we might start seeing that pullback, but the number was clearly pretty good. I mean, it was about as cold, it wasn't as cold as it could get, but it's a pretty cold number, and certainly has raised expectations now for a rate cut that might be coming earlier than anticipated before the CPI number. So as you can see, the market responded, but not as bullish as normally you'd see with a number like this. But then again, we are at the market high, right, Pete? I mean, this is, the valuations are pretty up there at the moment, and earnings season has been good, but not blow the doors off good. So it takes a lot to keep up with prices at this level.
yeah, it does. We're going to review some of our recent picks in just a minute. I think it was a week ago or two, there was some conversation in the chat room that I really had to chuckle at because you have so many trolls that are out after you. And it was like, oh, God, there he goes again. This is the luckiest guy I've ever seen. Harry just keeps hitting them. And he keeps hitting them. And the trolls keep getting more and more frustrated because they're just waiting for you to fall flat on your face. It is exactly the same shit for me. I mean,
they're rooting for it. In fact, they get to the point where the only thing they can start criticizing is trades you actually made money on. You might have made money, but it was way too risky of a trade or this. Okay, like you said, consistent luck isn't luck; it's skill. But I mean, hell, I just took around $189 average profit per share on MSTR on that trade there. Right now, I am in a Meta short. I do like the weakness still in Meta today, given where the market is. I have shares of PLTR, did that, waiting for that one to recover. IWM straddle did not move as much as I thought it would. Took a 96 cents loss on that straddle there. And now today we're just looking to see if this move sustained. What do you think? You think this is a sustainable move up, Pete?
I do, but I'm going to wait till the end of the day. We'll get into market analysis in a little bit. You covered some of your trades. I always like to go over our previous picks because that's the only way that you're going to know that this is a legitimate system, is for Harry and I to just keep going out there and proving ourselves day in and day out. So recently, and we have been long, we've been watching for this bounce and we have been getting long. So APH was a pick I made about 2 weeks ago. Hello. Let's see. And this is all on my YouTube channel. So this is not hearsay. This is in the live event or on my Sunday videos. I love this breakout here on MMM. This was during our live event 2 weeks ago. Beautiful. TSM was about a week ago. Hello. Very nice. And FLX was from last week during the live event. Harry, we missed you. Hasn't gone very far. It hasn't gone down. It's kind of compressing above the 50-day moving average. I still like Netflix. As you can see, it spends time compressing, consolidating, and then out of nowhere, whoosh, they decide they want to buy it, and it runs higher. And then my pick from Sunday was JPM. That was also one that I was looking at a week ago during a live event back in here. I loved this compression and this breakout right here. So I didn't highlight it a week ago. I wish I had. I was down to Netflix or JPM. Decided on Netflix, but I got on JPM Sunday in my video. Was not going to miss that opportunity. And you can see there's where the video came out Sunday, and there's the price action since. So nice chance to make some money. So yes, what's my market opinion? I think that we can go higher. What's important, I'm going to zoom out to a daily chart. For those of you who are new to the live event, I tuck a SPY chart behind the primary chart that we'll be looking at for stocks. So in the right corner, you'll be able to see what the M5 is doing. And I'm going to click on the D1 for the SPY. And yes, we could see follow through here. I like this breakout. We've got to be a little bit cautious because this is the bar from April 4th. And if I went back to that day, it would look very similar to what we're seeing today, this gap up. And in fact, the market continued to float higher and float higher in the last few hours. The bottom fell out, and that set this dip up. So yes, I do think that the market's going to continue to move higher. I like what I see so far. Earlier this morning, I cautioned everybody about this gap up. Gap and goes are very difficult to trade. They are our worst scenario for day trading because we have the risk of a gap reversal. So we have to wait patiently to make sure that we have support. We'd like more than half of this gap up to be preserved. It was. And we'd like to see a bearish cycle run, and it did. And you can see right here that as this bearish cycle ran, we preserved most of the gap, and lo and behold, we're right back at the high of the day. This was going to be a great bullish cross. We were ready for it. This was a benign bearish cycle, a divergence, if you will. 1OP was telling us to get long, to expect a breakout. Boom. And so very quick price action analysis. When you get a red candle in here, it's okay. We want to see it reversed in 1 or 2 bars. It was. Now we look for some release and some long green candles. Then we take gains on our day trading positions because on a gap and go, most of the move runs its course in the first 90 minutes, and then we compress. We will get a pullback today. There's your bearish 1OP cross, and we'll wait for the pullback. We'd like to see this bearish cycle run, and then we would like to see VWAP preserved. And if that can happen, then we have an entry point to get long later this afternoon. If the bottom falls out like it did on April 4th, we're going to notice that. We're going to pay very close attention to it, and we are not going to buy. In fact, we could even be looking for a longer term double top in the market. Right now, we don't know. We're just going to go with what price is telling us.
Your view up down right now to 526.75. We're still a ways away from that, so it may come down and test it, and then it'll be interesting to see if it holds. I tend to think it will today, but we will see. I do have an early pick. I like AVGO if the market stays strong. AVGO, a call debit spread on that, maybe a 1400, 1410. Call debit spread is a little expensive because it's already at 1405. So you could go to 1410, 1420. You can get that for around $4.10. I like that. I like the call debit spread on AVGO. The calls themselves by themselves are a little expensive. So you probably would want to do a spread on that stock if you're bullish. The shares obviously are a bit cost prohibitive for most at $1,406. But I do like this breakout here on AVGO. I also like it. There's a very clear downward sloping trend line from March 4th, connecting down. You connect at 4.4, connect again to the top of 4.11, and then again to yesterday, 2 days ago, 5.13. Yesterday, that trend line is broken to the upside. And then today, you have a nice continuation right off of yesterday's high, breaking up. You have 1438 as a kind of all-time high for this stock. So you might see some resistance there, but that is $32 away. Certainly enough space for a decent call debit spread on AVGO. So that would be probably my pick of the day right now. I think I don't see anything that would change that unless we see SPY retrace. So again, that's all contingent on us maintaining this market breakout that Pete just talked about.
Yes, and so you're going to have some folks out there who are calling for a market reversal right now. And you're always going to have that contra crowd out there that, oh, the market can't rally this much. Oh, the CPI wasn't that much lower. This thing's going to roll over hard. And so you will get some S&P day traders who are looking to short this move, the move that all of you should be paying attention to. And it could fall apart. I'm not saying that it won't, but you would need to see some stacked long red candles on heavy volume. If you have data back to April 4th, go back and see how that day played out and look at that sell-off. That's how you know that you've got some serious selling pressure. We're not seeing anything like that right now. So the better play and the mindset that you should be in, you come in, Pete told me gap and goes are not good to buy. There's a lot of risk to the downside. So, oh, there it went without me. Okay, I'm being patient. You are going to get a window of opportunity. And the more this pullback looks like a crowning formation, the more it looks bearish, the better it will be, because that's going to lure in short sellers. You'll get a bounce somewhere around VWAP, and that will be your entry point for a bounce later in the day and a good place to enter long positions. So I am looking to add to swing positions today near the last hour of trading when I am convinced that the market is not going to roll over and play dead. And so if I zoom out on the D1, do a little market analysis here, and this is what I was talking about earlier. In here, I told everyone in October, get out of your short positions where this thing's going to bounce like nobody's business. We're going to have a massive rally. I was 3 days early, I think. Okay. So yes, we got that bounce, and this strength was so strong. We were adding until March, when we started to kind of flatten out. Okay, well, this is a time to start taking gains on your swing long positions after a run like that, when the momentum is starting to wane. We had the April 4th long red bar off the top. I told you we're going to see increased volatility. This is a time to be in cash. This is a time to go into day trading mode. And we were able to catch some nice day trading shorts right in here. Now, this is where I told everyone we're going to be getting a bounce. How did I know? Because of this strength. You don't need to take my word for it. Go back and watch every freaking video from October. Look at every market comment I posted. So this strength told us we were going to get a bounce, and this is where we took starter positions, and then we've been adding on breakouts above the 50-day moving average, above AVWAP-Q. I'm going to put some of the moving averages up. And the people that were coming out of the woodwork telling me I'm a freaking idiot, that this thing was going to roll over and we're going to have a big correction, where are those folks now? They're nowhere to be found. I had people here on this April 4th bar telling me, oh no, this is not a market top. We're going higher. Where are those folks now? So I'm not trying to predict what price action is doing. I'm just reading it, and it's telling me that this dip was fairly brief and shallow, multiple tests above the 100-day moving average. You've heard this all before from the live events, teaching you how to read price action. This is a nice breakout to a new all-time high. What I'd be looking for now is that this rally starts to get some tiny little bodied compressed candles. That would tell me that a dip is coming and to take gains on my swing longs. And you will notice that this rally has taken place on light volume. It's not bearish. It is not bearish. It's not bullish either. It tells us to be passively long and to gradually add, because this volume could pick up, legitimizing the breakout. So that's what I'm looking for here. Sorry to get a little long-winded, but it's a little frustrating to have people calling you out. And who are these people? Now they're gone. They've lost money.
Of course, it costs them nothing. The only thing that costs them nothing is to be a troll. So they do that for free. The couple of questions we have here. Do you guys see any chance of Nike making its way back into that last earnings gap if market conditions stay bullish? Well, I'll certainly tell you Nike is not bullish today. Market is strong. Nike is down about 1.12%. I don't like Nike as a short or a long here. Obviously not a long. You have a pretty well-established upward ascending trend line that starts at the bottom of 410, connects to 5.1, connects to 5.10. That gives kind of a little bit of support there for Nike at a bottom. But then, you have that earnings gap, and that gap is 95.17. But then you also have the 50-day SMA at 94.35. So that's two different levels of resistance it has to get through in order to even make it into that gap, which it certainly isn't doing now if it's going to be bearish on a day like today. So Nike is kind of in no trade zone for me here at the moment. It's bearish, but you can't short it with that support. And you certainly can't go long on a stock like this, which is relatively weak and has several levels of resistance above it. So I would avoid Nike. I could tell from your question that you probably are holding Nike. If you are, then the only solace you could probably take is that support line underneath it there. If it breaks that support, watch out below, and Nike can keep going down. So look for that support line. Make sure it holds if you have the stock.
Agree. Yes, it is more bearish than bullish. And if you're looking to short it, then you drop a alert line, click GTC, click on the low of that candle, click on the low of this candle. Now you're going to be alerted if it breaks below it. You still do say it has some horizontal support here. The only thing keeping Nike from tanking is this strong market. It's the only thing keeping Nike from tanking. And when the market rolls over, if it did roll over right now, guess which stock is going to lead the charge on the way down?
Yeah.
Ding, ding, ding. Nike.
Yeah, just don't do it.
Just don't do it.
Collector
I love it.
Heroes Media says, hey, this is a warning. Meme stock AMC GME squeeze has come to an end. Game over. It's all over. Short now. Wrong room. Wrong. Read the room, dude. We don't participate in crap like that. Roaring Kitty posts something on Twitter and everyone goes nuts. And I mean, look, this is a $5 stock. So everything else is just vaporware. It can go up, it can go down. It's all based on retail insanity. So if you want to flip a coin, you want to try to short it now and then wake up tomorrow and find the things at 100. You want to go long now, wake up tomorrow, find the things at 10. Go ahead, have fun with it. There's no rhyme or reason. There's no point looking at technicals. There's no point trying to guess whether or not the short squeeze is over. There wasn't that high of short interest in it to begin with for this to be a short squeeze. This is just moronic retail traders jumping all over a stock because someone posted, and he didn't even post anything about the stock. He just posted a meme on X or Twitter, whatever. It defies any logic or common sense. So does AMC. So your warning is unnecessary because we're just not participating in shit that you cannot predict. We like to have an edge, and there is no edge in predicting meme stocks, as many people who have bought and held GME and then lost all their money have quickly found out. Did you ride the GME craze there, Pete?
My nephew called me on the opening bell yesterday wanting to short it. And I'm like, dude, man, I'm busy as heck right now. And so, when you get calls like that, then it's on everybody's radar and they're all watching it. And we have high probability trades that we look for. This is just nonsense, okay? Go to Vegas. You'll have more fun. They'll serve you some free cocktails and you can gamble your money away. This could go either way. Look at the option implied volatility on this thing. I think it's 240. So insane. You can't short the stock. It's not available, or at least I don't think the availability is there. And you can't buy puts because you're going to pay through the nose for these. You can't buy calls. Just leave this nonsense alone and trade stocks that have a nice, orderly trading pattern.
I mean, if you think about it, when let's say you were able to short it, right? Let's say you were able to short GME right now at $33, and you're thinking, all right, this thing's going to go back down to 10. Great. And because it's got no rhyme or reason to it, let's say all of a sudden Roaring Kitty posts something again on X, and all of a sudden this thing shoots up to 50. Now you're short, right? Now you might be thinking in your head, okay, all right, if I just hold and wait, this thing's going to come back down. But there's another part of your head that's going to think, well, what if the insanity continues? By definition, it's insanity, right? So insanity has no rhyme or reason. It can continue. What if it goes to 100? What if it goes to 80 and you're still short? Are you still holding? At what point does your margin call kick in? At what point do they force you to close it? And then, of course, you wake up the next day after you close your short and bam, it drops down to 10. You have no ability to rationally look at those charts and make a decision. You have no ability to go, okay, just because it went up and I'm short, I can still hold because of this resistance level, or I can still hold because of this. None of that applies. In fact, all that applies is a fear that it could keep going. So yeah, there's just, obviously a year from now, is GME going to be anywhere above $15? Probably not unless not unless it gets bought by some company. But there's no point in holding through that roller coaster. Someone here asked, Saeed, hey, Pete and Harry, for intraday trading, is a support and resistance on, say, a 30-minute chart stronger than the same on a 5-minute chart? Are both considered similar? Well, there's two ways to think about that. Obviously, one way to think about it is the strength of the number itself, right? Like if you're looking at an average, if you're looking at an average price index or something like that. An average over a longer time period is going to be a stronger average than one over a shorter time period. So if you're looking at a daily average, it's going to be shorter. It's going to be stronger than a 5-minute average. So that's one way to look at it. But another way to look at it is how prevalent is that that line, because support and resistance lines are only as significant as much as other people pay attention to them. So look at VWAP. VWAP is generally a 5-minute established volume-weighted average line, right? Now, you can look at the 30-minute VWAP, but the VWAP that institutions and that most traders are looking at, if you're not looking at a VWAP or anybody, you're looking at straight VWAP, is the daily 5-minute VWAP. Now, when you're doing that, if you're looking at the VWAP on a 5-minute basis, and you have the average weighted price, and you're looking at your 5-minute bars and how close it's approaching that, VWAP. Well, VWAP, first of all, is just an overall average number, so your time frame isn't going to matter as much. But what matters is how much do other traders and institutions pay attention to that number, because the 1 hour level support resistance might be stronger than a 15 or 5-minute level support resistance. But if nobody's looking at it, and if nobody's paying attention to that line, then there's no buy and sell orders tied to those levels of support and resistance, and it doesn't matter. All that matters, and all of technical analysis, is based on how prevalent are those levels of support and resistance with other traders. And so how much of that liquidity out there is basing its decisions on those levels. The more prominent the level, and the more they're basing their decisions on it, the stronger that level will be. It's as simple as that.
I had one comment here regarding the April 4th big reversal day, that it's different than today because at that time VIX was starting to increase. It did later in the day, by midday, even before the big crackdown. So valid point. And the other difference that you have is we didn't really break through convincingly on April 4th. We just tested the high and then we backed off right away. Here, we are actually breaking out. We have a clean breakout to a new all-time high. So yes, this is much different. Let's take a quick look at VXX. Is something that we can all access. And there you can see how it has been dropping through the course of the day, and it's on its low. So yes, I would agree. I believe this rally is going to hold today.
like we all saw, there was and you could see on this gap up, as you talked about, you had a little bit of a retrace here, and then it just nice steady climb. We have a decent bull flag forming here on SPY on a 5-minute. So we might see another leg higher. Again, the only thing that gives me pause is more of on a sort of valuation level, where at a certain point SPY and the index becomes cost prohibitive, and it's not keeping up with earnings. And a lot of this enthusiasm here is based on the hope that we're going to get these interest rate cuts, which had started to become something that they had let go of as a possibility. But today's number renewed that hope. But that's what it is. Yes. It's a hope, right? So the next number could just as easily knock that back down. So it's
yes, they are always looking for
earnings.
Sorry for the interruption. Yes, they are always looking for those rate cuts, aren't they? I mean, it is just rate cut. Well, now that they've kind of given up on the rate cuts, maybe they're a little bit closer to it. We certainly had the economic soft patch to start justifying perhaps a 1/4 point rate cut. But yeah, they're going to wait for inflation to ease. And, today's number was not that dramatically great. I mean, okay, 0.2% increase is more in line with their target, but it's not 0, which would be even better.
Yeah. By the way, I like crowd here as well. Really like crowd.
I was just looking at PANW, and I like that one as well, but I've highlighted it, so I'm not going to highlight it again because I've just recently highlighted it. So like this compression breakout here to a new high of the day. Oh yeah. Beauty. Wow. Love that. These are automated trend lines in Option Stalker Pro. Beautiful breakout right there to a new all-time high. That's a gorgeous one. Man, I could get behind that one. That could be my pick of the day. Apple was some pick that someone asked about. Do we like it? This is a nice chart. This is a D1 automated trend line breach to the upside. You've got a high plus, you got a couple of high minuses. You've got this big gap post earnings. We're through that high. Everything looks good for Apple to challenge the all-time high. The issue that I have with it versus other longs, which is this is the game. We have a finite amount of capital, and we have to decide how we are going to allocate that capital. Is Apple the best pick that I can find? The answer would be no, because I don't like this big trough and this selling that we've seen. Does it look good right now here to go higher? Yes, it does. Can I find other stocks that I like better? Yes, I can. Ones that did not have this big drop.
We have some decent picks here now. I mean, AVGO, Crowd, PanW. I mean, these are all obviously on the tech side of the world, and earnings are starting to wind down. We got, I think, Walmart tomorrow, right? Maybe Amet tomorrow after, but nothing really market moving is coming, and so tech, pretty much all the info that an institution would look for is in, right? They've already got the CPI in, you have earnings in, you have the price action that you're looking at. And what's happening today is if you look at the various sectors, tech is leading the pack, right? You got real estate, utilities, et cetera, but it's really tech. So with all the info in, tech is now being bought up. And that tells you something, right? That gives you an indication that institutions are deploying their capital because they feel that the prices they're getting now are are prices that are going to be higher tomorrow. So it is, you know, a good sign for tech. And if you get a market pullback, then probably tech would be the one that's least affected by it. You have some decent relative strength throughout. So I like Crowd. I like AVGO. I mean, you know, even NVIDIA, which is getting a bit extended here, granted, but I like NVIDIA. The only one I don't like is Meta out of all of them. But hold on here. I just got to take this call here, and I will be right back.
I did have a question. Question was something along the lines of what happened to NVIDIA? Nothing. I mean, you had one long red bar here, very little follow through, way above VWAP. We can put VWAP on here, and you can see didn't even get close to it, and it was gobbled right back up. So I like NVIDIA. I think very nice chart. I also like, you can see this downward sloping trend line, high minus right here. Would like to get through that, but SMCI was another one. It's another chip stock. I like that one. I got an alert this morning. It's drawn an alert line right through here. Breach to the upside. I like SMCI. Look at that steady grind higher. SMCI could easily be my pick of the day. Qualcomm, hard not to like this stock. It's a bit away from the EMA 8. Let's put that up. We like to be in nice and tight to that. I like my EMA 8 to be black. So I'm going to change the color on that. And you can see how it's a little distance away from it. So either the EMA 8 needs to catch up or the stock needs to pull back. But yes, I love this breakout on Qualcomm. Really, really nice. And look at this strong uptrend here. So when we were comparing Apple to other stocks, look at this. This is the kind of stock that you want to be behind. This is the kind of stock that institutions are buying. Never had that big trough. Apple did miss on their revenues also. So the market was able to discount that. It is a mega cap stock. So as the market goes higher, they'll have to buy Apple because it's in the indices. So that also helps to prop the stock up a little bit. But it's being dragged higher by its hair right now. What is going to be my long of the day? I don't know. And there was your Apple chart. We've had a bit of a rally in Chinese stocks. I would be very careful with those. I see their economy is really struggling. PBOC is going to be issuing some longer term bonds. I saw that. So they're going to be trying to stimulate growth. AMAT on a breakout to a new all-time high through this high minus trend line. It would need to get through the high of the day. Earnings on 5/16. So no, this is not going to be my pick. But that is a stock to watch tomorrow. It's got earnings announcement. I would expect it to break out. All the chip makers, TSM has been a recent pick of mine. Look at that baby go. I just love that. They came out and said that their earnings are going to be up 30% in Q2. That's huge. Texas Instrument, nice breakout. No pullback during the market decline. On a D1 basis. There's your market decline, D1. What did Texan do? Compress, held the gains. Market starts to rebound. See you later, relative strength. It's what we do. It's how we trade. So just clicking through, I didn't have a pick ready when I started the live event today. So I'm just kind of going through. I'm just going to focus on my Green Royal Flush search. It's just such a great search. MMM's been on the list. Gosh, I really do like PANW. I had highlighted earlier today. So let's take a look at why I like that. CRWD could be the pick that I use. I might have to steal Harry's pick. This is why I like this. You can see it's still got this big gap that it can fill in here. Downward sloping trend line. We're poking through. But Pete, you just said you didn't like Apple because it pulled back. Yes, that would be a reason that I don't like PANW as much. It is getting through some resistance points and it's got that nice gap to fill. So It's not going to be PANW. I've highlighted it back in here also as a bullish put spread. I did like that bottoming formation. So let's keep looking. I'll take a look at some of your questions here. Javi, you sold some bullish put spreads on our picks, JPM, MU, Google, Netflix, AA, TSM. They all paid awesome. Good for you. And that actually is a more conservative way to play the upside to the market, because that's a neutral to bullish bias, and you're distancing yourself from the action. You're taking advantage of accelerated time premium decay, so that if the market has a hiccup here or there, you can weather that because you're selling out of the money and the stock can move around a little bit. So well done. Nice. JPM at an all-time high. Seems like there's a little profit taking place in the banks. And let's take a look at JPM. So yes, you would like on a day like today, with the market making a clear all-time high, you would want this stock to blow through, obliterate that previous all-time high. Struggling a little bit. It's not to say that it can't do that tomorrow or the next day, but as far as today, yeah, that's something that you want to be mindful of. You, by all means, want to preserve that last long green candle, especially with this type of market action. So what do? You click GTC and you click on the bottom of that green candle, and if the stock pulls back and breaches that, you may want to take gains on your JPM, and you might want to find a faster horse to ride. Could be one of the tech stocks. The fact that tech was rallying today was very important. It's been fairly dormant. So you want to make sure that tech is joining this market rally, which it is in a big way. So MU has been a nice stock too, but you can see this is a pretty decent size pullback here as well. All the chip stocks pulled back. I think SMCI is going to be my long. This is going to be my long. And the reason I like it is you can see, well, Pete, you had this pullback here. Why didn't you like Apple, but you like this one? Well, look at the rally that this stock had. It went from, call it $300 to $1,200. Well, okay, that's a big move. That tells me that buyers are interested in here. So when it did pull back from this high, it still preserved most of its gains. So this is just a normal pullback in a bull rally. And now you're starting to see that stock move higher. How could you play this? You could play it by selling an out-of-the-money bullish put spread, keying off of the 100-day moving average. This stock tends to carry a lot of premium, so you're going to get well rewarded. 100-day moving average, $750. So let's take a look. We'll go into option price. Actually, you know, I'm not able to bring that up right now, so that's how I would play it, though. I'd sell that bullish put spread below the $750 strike price, sell the 750s by the 745s, do that for a credit of $1 or more. Try and stay inside of 3 weeks, ideally inside of 2 weeks. That should be a nice way to play it. You can also wait for a breakout above the 50-day moving average, and you could buy it there. And you can see also that the stock is not very far from that EMA 8. So that's another good way to play it. So let's take a look, see if there's anything else that's popping up here. Schwab breaking out to a new high here. Decent as far as the financials. Really strong trend in here. Let me see if I've got any other questions that are coming up here. NVIDIA's earnings. Good point. NVIDIA's earnings. Let's check the NVIDIA earning calendar here and see what we've got. We've got earnings on 5/12 22. So that is in 1 week. So yes, I would be carefully trading this to the upside. You don't have any real opportunity on a pullback. You can day trade the heck out of this. So I like NVIDIA. I like the breakout, but that would be one reason to perhaps look for another stock to trade. SMCI, that one I believe, yeah, that posted a week ago, so you don't have any earnings announcements to worry about there. Sorry, doing something here. So let's see what else we got. Opinion on CEG and NEE. NEE I just looked at the other day. NEE was actually quite nice. Again, we're away from that EMA 8. So if you were long, here's how you would play that. So let's say you've got this breakout here, you like it, you buy some here, you see the continuation. You could add. Ideally, you'd like to be closer to that EMA 8 and wait for any kind of pullback to add. So now you're simply riding this trade. I would ride it until I see a bearish engulfing candle like this, except that wasn't a bearish engulfing candle. You open above the prior day's high and you close below the prior day's low. So it's a long red engulfing candle. I would ride this move until you see that, but I would not buy here. You would need to see a pullback to the EMA 8. And even then, you would just take a very small starter position. You want to make sure that the stock is showing good relative strength. So market higher, stock needs to go higher. So at this juncture, I'd just be looking for an exit point on an earlier long to take gains on. And I would use that bearish engulfing candle D1 as my sign to do so. The other stock that was mentioned was CEG. Really nice breakout here. Got earnings before the open. You can see how it's been able to hold that and continue to move higher. CEG looks good, not too far from the EMA 8. So yeah, that's a beautiful play and very, very nice. That was from Luca. Luca, very nice picks. Boy, you are nailing some really good strength, and I hope that you've seen these earlier.
I'm back on here. Sorry. Don't know if I missed much.
Did not miss much. So we've got the market compressing here at the high of the day. This is very typical of a gap and go. What I'm be looking for on this bearish cycle is at some point, let's see, probably in the next hour or so, you're going to see a drift lower, and it's going to look very daunting. It's going to look pretty legitimate and pretty real. And you'll want to see support above that VWAP, and that would be your re-entry point for longs when you get this bullish 10P cross. So kind of watch for that. Know that the more convincing this drop looks, like a drop below that low right there, right here, and some red candles, that is going to get shorts super excited. But as long as you don't get long red consecutive candles in big volume, then you're looking for a bounce somewhere at or above VWAP on that bullish cross.
Yeah, I mean, if I were a trader being long right now, just set an alert at VWAP and commit to yourself. Look, if I'm probably going to see a retracement here, I'm not going to freak out. I'm going to hold until I see VWAP breached and confirmed breach. Then I'll take a look. Then take a look at your longs and make sure, see what position you're in. See if you pick them right, you'll have some relative strength to weather any type of bid check here, which you might get. And then you won't overreact until unless you see that alert set. But draw that line in the sand. VWAP is right now on SPY is going to be very telling. I don't even see it being checked, but I do agree that we'll probably start seeing that that little bit of retracement here, that drift down to around 527. And, you know, you're right. It'll look, you'll start thinking, oh, well, this is it. It's topped out. Now we're getting now we're going down, and you'll start looking at shorts, get out of your longs. And that would be the wrong move. Let it confirm. Don't let the market just fool you and into thinking, now we have to get short. Just let it run its course. Looking to see some other. Pan W really is a nice pick there. What else looks good here today?
SMCI is my pick of the day.
SMCI, I like it. You got you got some 928 is the 50 SMA, but it is looking strong, certainly. Riding that tech wave, and SMCI is a mover. If you're doing options in that, obviously you should do some sort of spread, right? Because SMCI generally comes with a lot of IV.
Yes, and it so I'd suggested selling a 750 700 bullish put spread below a 750 745 bullish put spread for $1. Probably wouldn't need to go more than a couple weeks out for that, and that puts you below the 100-day moving average, and it's 150 points out of the money. So you got plenty of wiggle room. But I am expecting the stock to move higher, and then yes, you would wait for that breakout above the 50-day moving average to actually have a very long bias. You want to see it get through that resistance level.
Let's see here. Obviously PLTR, I think there was an overreaction on the earnings trade, on the earnings there. That's why I'm still holding that, and it has based at a support level, so I have no qualms holding that. Same thing with SHOP. I have no qualms at the moment holding SHOP, particularly since I know institutions are starting to buy up SHOP at a 58 level, so no issue there. Someone said, I want to see if any of the trolls have any merit in their criticism. Look, at the end of the day, just look at my profit numbers. All my trades are out there. So if I am not making money, then they're right. If I am making money, then they're idiots. Considering how hard it is to make money trading, the fact that I have made consistently 7 figures every single quarter in a transparent way with every trade posted should give you all of the information you need on my trades. Does that mean I'm 100% accurate? No, nobody is. And if any trader tells you they hit 100%, then you should just tune out the moment you hear that, because there's absolutely no way they do, unless they made one trade and that's it. But you know, look, trading is you make your best shot at things that you think you have an edge on, and at times they don't work out, right? Particularly with options trades, when you have a limited amount of time for that trade to pan out, and if it doesn't, then you're going to, the option's going to drain out. But if you're holding shares, which you can do in a larger account, you have more patience with the position, right? And even then, though, when you're holding shares, it's a limit. There's a bottom line. But I did put a whole post out there on drawdowns and risk reward, and a lot of people look at that as a 50-50 type issue, right? Oh, well, your drawdown was $1,000, but you only made $500, so that was a bad trade. Well, yeah, that is if it's a 50-50 proposition. But what if that setup is profitable 80% of the time? Well, now drawing down to 1,000 and making 500 on the upswing actually makes a lot of sense. And if you make that trade 100 times, you're going to be profitable. You'll lose $1,000 20 times, and you'll make $500 80 times. You'll wind up $3,000 if you do that trade 100 times. There's this really, people who criticize certain trades because of drawdowns don't understand statistics very well. So let's see. What else?
I get them all the time. I've been posting videos to YouTube since the financial crisis in 2008. So anytime you can go back and see how I was positioned, did I get it right? I post pics in every single flipping video. You can go back and check to see if they made money or not because I recap them on the next video. I have daily market comments that I post. You can zoom in at any time frame you want, check the daily, even the 5-minute intraday, and I still have people freaking trolling me. All I've done is prove it year in and year out for pretty much my entire career, and I still have people, oh, you don't show me a P&L, and so it must not be real. I'm showing you before the trade is even taken. And guess what we just got here? I just got an alert on Nike. So Nike continuing to drop. Remember how you and I just said, don't touch this thing. This thing is going lower. Look at that move down.
Wow. There it is, Nike. And if you're in that trade, and it looks like it's going to break through that upward sloping trend line here, and it looks like it's right, it just broke through that. You might want to consider exiting if you have a long position in Nike, which I don't know why you would, but if you do, you might want to consider exiting. Signal P still on the shop trade. Okay. I make earnings trades at times, as you all see. I don't post them in the 1OP chat, in the one option chat room. I post them on X. I do earnings trades because I have a slight edge on earnings trades. I get an incredible amount of institutional information that I share. Sometimes those earnings trades do not pan out, right? Overall, in the long run, they do, but occasionally they don't. Right now, then when they don't, I then check on when will institutions start to buy back up that stock, or will it continue down? Shop, I have plenty of indications that they are going to start buying up the stock at around 58, right? So that is where I'm holding it. If it flows, I will consider it. Not, that's why I'm holding the position, just like I did with Melly with the short of the puts. I collected the premium on the puts that I sold on Melly, and then I held Melly through the earnings trade and made close to $1 million on that. So there's a reason why I'm getting lucky every single time. Where my trolls keep saying, well, eventually luck will run out. Well, it hasn't run out yet if it is luck. And you would think if it's luck, then eventually I would flip a coin and it would come up tails, right? But I haven't gotten that tails yet. So there must be something else going on. I wonder what that is. Someone said you legged out of IWM and Meta. Is there certain criteria makes you want to leg out? Yeah, Meta is relatively weak today. It looks like it's strong now, but look at the market, right? So you got to compare it to the market. So I'm legged out of Meta, and I'm holding the puts on it because any market pullback is going to drag Meta down with it. And when that happens, I don't want those short puts holding back the trade. So they were pretty much at around the $1. I took the profit on the short puts, and now on a pullback on Meta, I have until Friday on that. I will take profit on that. Again, why did I buy more shop? Once again, there's a reason. I am being told by an institution when they're going to start buying. I then share that information with retail traders about what the institution is doing. Those buys occur over time. I lowered my average cost on shop to 72. No, that nothing our followers should buy themselves, because I've said a million times, even though I'm following the institutional trades, you should not do earnings trades. Not a chance. You do have the same information I have. Even though I'm sharing it, you don't have all the upfront minute-by-minute information. I can turn right over here to the Bloomberg terminal, type into JPM and say, hey, what does shop look like on your desk right now? What are the buys? Boom, I can get that information. I could share it with you, but do you know how to interpret it? Do you know, can you get the moment I get it? No. So again, I've said this a million times. Sorry if I'm frustrated, but I say this thing over and over and over and over and over again. If you want to wait until that one quarter where I don't make money, Great. Let me know when that is. Send me a postcard.
And if you don't have that type of fundamental research available to you, I have good news. You can just trade price.
Yes.
That's
Price action.
all I do. That's all I do. I don't trade fundamentals at all. I trade price. Now, if I hear TSM comes out and says that their revenues are going to be up 30% in Q2, I'm going to remember that. I'm going to watch a stock. I'm going to see if the stock is pulling back, if there's a good entry point for me, because that is good news. But I'm not going gonzo looking for fundamental research. I'm aware of headlines when they come across, but I don't dwell on them.
That's why price action gives you all the information you need to know. In fact, if you want to know what institutions are doing, look at the price action. You can see what institutions are doing. In fact, that is the whole idea behind relative strength and relative weakness. The reason a stock is comparatively stronger than the market or comparatively weaker than the market, where all else being equal, it should be the same as the market, is because institutions have intervened in buying or selling to drive that stock up or down proportionally higher than what the market is doing. That gives you your indication of exactly what institutions are looking at. So you can look at a stock like Crowd today. You can look at a stock like AVGO or PanW or MSCI and see those stocks are strong. The market is strong, but those stocks are relatively stronger than the market. The only way that happens is with immense buying volume that exceeds the volume you would normally get through a strong market. That is institutional buying. And you are, as a retail trader, hopping on the coattails of institutional buying and selling and grabbing at the breadcrumbs that fly off their table. That's the idea. That's what you want. That's why the trend is your friend, because the trend is institutions, not retail. When you follow retail, you will get burned. Why? Because retails are idiots and institutions always make money. Show me an institution that doesn't make money, and that is an institution you shouldn't follow.
I did have a question here. Do I use supply and demand zones? I'm familiar with the concept. It's basically areas where you have heavy volume that's gone off. I don't use them though. I use charts. I use horizontal support and resistance lines instead of using supply and demand zones. This tells me there's a horizontal resistance level, which, by the way, the market just broke out to a new high during this bearish cycle. So this is a bit of a divergence and a continuation, sign of strength that we're continuing to go higher here. But yeah, if I see horizontal support at a key price point, that's what I'm going to be leaning on. So I don't really use supply and demand zones at all. I consider them to be horizontal support and resistance levels.
In fact, I would heavily recommend against, Pete. I'd recommend against people using supply and demand zones because the idea behind them, the theory behind them, is you're looking for trend reversal, right? You're looking for areas that are going to see, let's say demand zone or support zone, where buying pressure can stop or reverse a downtrend, right? As there's all these buy orders that are theorized to be there, or that supply zone or resistance zone up there, where you're going to get all the selling pressure that's going to stop or reverse a uptrend. And what it does is it encourages this mindset of, okay, this stock is up, it's gonna go down, so I'm going to short it. Or the stock is down, it's going to go up, I'm going to go long. Rather than waiting for evidence of that support, rather than waiting for confirmation of that reversal, what you're doing is you're trying to predict that reversal. You're trying to predict where the trend's going to reverse by saying this is a buy zone, or this is a supply zone, this is a demand zone. So this is where I'm going to jump the gun and get in before everyone else and predict the reversal of this trend. That way of thinking is a retail way of thinking that's going to get you in a lot of trouble. So your best bet, ignore it, forget you've ever heard of it, don't use it, don't look at it. Supply and demand zones are going to get you in trouble.
I had one comment here that's actually pretty funny, and that is that I look like a giant next to you, and it's because of our video feed. There's no reason behind that. I should probably adjust my camera a little bit here, zoom out. So yes, we'll have that adjusted the next time. Sorry.
Well, I always say I stand on the shoulders of giants, Pete, and
Yeah.
you have some pretty broad shoulders to stand on there. So there you go.
All right. So
Let's see here. Oh, I think I got a interesting, great one. Goofy always puts a great suggestion. AMGN is another relative strength stop. Gap up post earnings, tested the gap and found support above AVWAP-E and about to challenge post earnings high. Something I like outside the tech sector. AMGN, let's take a look at it here. Very nice. Nice break of compression here. Yep, challenging that earnings high. I do like it. AMGM, yeah, as usual, a very nice pick. If you're looking for something non-tech, that is pretty spot on. What do you like that stock there? AMGM?
I do. I mean, I like the pattern right here. I like the continuation after the gap up. So yes, I do like that pattern. It's been in a very deep trough here. So I probably would go back just to find out what the heck happened to Amgen. Did they have some kind of clinical trial that didn't work out? What was the deal with this drop in here? But for right now, it does look like this stock, whatever the news was, whatever the reason for this dip, it is gapping up. You can see it makes pretty big volatile moves. So it is a biotech, and a lot of biotech stocks have this very funny, they fall in and out of favor, it seems like. And plus, they tend to be really newsy. It's like it's either the news is gangbuster good or not.
Yeah. And a lot of times you can't even depend on the news itself because a lot of a price movement on these biotech stocks is in anticipation of a release, a report on a trial or whatever it is. And then that comes out and you think, oh, wow, it worked. Everything's great. And then the stock drops and you never see sell the news events like you see on biotech. Biotech is just sort of just famous for the sell the news. AVGO, by the way, up $8 since I mentioned it.
I have a question earlier today. I mentioned that in order for this gap up in the market to be legitimate and to gain traction, we needed to see participation from tech stocks. Why did I say that? Is it because tech accounts for the largest portion of the S&P 500? Yes, that is why. And those stocks have been relatively dormant post earnings. They really haven't moved much. We needed to see some life in those stocks because only when they move higher would we have the fuel necessary to push the market higher.
Yeah, the market is not some monolithic thing. It is composed of thousands of parts, some parts bigger, some parts other. And it's not going to move without some of those larger parts moving with it, right? You can have all the smaller parts moving, and if the bigger parts, and you take that magnificent those seven stocks, they make up a disproportionately large portion of the market. That's the liquidity, that's the ETFs, that, those are market movers. It's why NVIDIA earnings is a market moving event, right? Go back 2-3 years ago, it wasn't. Now it is. Because it makes up a huge amount of the liquidity in the market, just the volume alone going into that stock. So, it's very difficult to have the market move without tech. Normally, you have a counterbalance. When tech is up, energy is down, right? We see that all the time. Tech up, energy down. Energy up, tech down, right? But on occasion, and if you look at today, and you look at the sectors, you do have energy down. Today is one of the only sectors that's down, but it's kind of flat, and obviously tech is up a decent amount. On the days when you have both of them up, both tech and energy up, the market just, the market just keeps going. And as you can see here, SPY did break out to the upside, and it is really making a new, every move right now is a new all-time high on the market. So this is not where I would get long. It is sort of a pretty precarious point, but obviously there's no denying that this is a bullish breakout.
And one of the reasons that we're getting such a nice move goes back to the daily chart. So we got this really, really, really strong trend from November. And then we get this dip. We were waiting for this dip, but you can see these are mixed, not mixed, but overlapping candles. Gap up, sell off, gap up, sell off, gap up, sell off. So overlap into the previous candle. That is not strong. Even though these are red candles, they're overlapping. So that tells us that buyers are still out there. Well, you have all the pundits and all the bears clamoring that, oh, this is it. This is it. We're starting to see economic weakness and the Fed's not doing anything. This is going to be the short of the century, that kind of mentality. And then whoosh, see ya later. Well, guess what? All these smart folks right in here, they are fueling this move higher because they have to cover their shorts. That's what's happening. We're going to break out to a new high. So the guys that shorted in here, ooh, I didn't like that move. Oh, well, the 50-day moving average is going to hold, so I'm not worried about that. This is still a good short. Now we break out above the 50-day moving average, and they're thinking, oh, God, I didn't like that. But the all-time high, this is going to be a double top. There's going to be a double top, lower high, no problem. I'm going to hang on. I'm going to see what happens. Break out to a new all-time high. Guess what they're thinking now? Oh, shit. I just got my ass handed to me. I got to cover. This thing could go to the moon now. So that's what happens. That's why you don't pick market tops. That's why all in here I said that at most, we are day trading from the short side because we're trading against this strong trend. And now, for those of you who have had your butt handed to you, this is a very important lesson. You've already paid for it, so you better learn it or you're going to pay for it again. Do not pick market tops. And if you're a very long-term swing trader in here, you do not have to bail on the first sign of trouble because you know that this is so flippin' strong that at very minimum, you're going to get a bounce close to the all-time high. And that will serve as your exit point if you do make a double top lower high, but it didn't happen. In fact, you could be adding in here to your already long positions that you have on a very long-term swing basis.
It's funny if you look at, just take X right now, Twitter, whatever. You can't, if you're kind of follow financial stuff on there, you can't scroll more than a second without seeing some sort of article or something that goes, the man who predicted Bitcoin when it was at $5 says the market is going to crash by 50%. Or the person who called the 2008 crisis thinks we're headed for a huge cliff. And, there's so many of those. And the fact is that people actually click on those and people actually look at those. Forget the fact that whoever that person is probably in between those two called 100 different market crashes. And, we're right one out of every 100 that they call. But people, these clickbait ads, and here's any serious article, and even the serious articles need to all be taken with a grain of salt, right? Because if you look back, what I now tend to do is when I see one of those articles, is I will click on it and see what has that author recently been saying. If they said the opposite of what they're saying now, just like a week ago, you could just dismiss it right out of hand, right? They're just flipping back and forth. But no serious article is going to try to clickbait you with a headline. That's your first giveaway. If you see any headline that's a clickbait headline, don't even bother with it. Then when you see an article, maybe from the Journal, maybe from Barron's, something that might have some more legitimacy than Joe from Ohio called the crash in '87. Look at who's writing it, and then look at their past month of articles. Are they consistent? Are they saying the opposite? Then look at the content of the article. Then when you're done with all that, ignore it all because it's all crap and it's all bullshit and pay attention to price action.
Oh yeah, there've been so many analysts or brokerage firms too, and I mean, I can go the perma bears. Gosh, there was Elaine Garzarelli and Robert Prechter, Dow 100. Oh,
Hmm.
nice. I mean, so this is back. They got the '87 crash right, and throughout the entire '90s, they're calling for another market crash, and yeah, didn't happen. Mark Farber, I think, is another perma bear. Gosh, the list is so long. These guys are just constantly calling for market tops, and they've been wrong. I can't imagine that they still have followers. There was another analyst, I think his name was Henry Blodgett, was maybe JP Morgan, whatever. His deal was that, oh my gosh, Warren Buffett doesn't know a thing. He doesn't know the new world of investing. This is in the late 90s, when all you had to have was a .com behind the name of the company. And he blew up. He blew up hard in 2001, 2002. So just you have to be very careful of who you're following, especially these analysts that are trying to put fundamental information behind it. Someone just posted that Kathy Wood was buying Shop at 63. That's a name that I wouldn't put a whole lot of credibility behind, not given what's happened in the last 3 years for sure.
No, no, she's had quite a bit of misses there. And, even with some of the rebounds in her stock, I think her portfolio is still pretty far down. Let's see here. Floor traders. Someone mentioned, Med had mentioned some institutions use floor trader pivots, R1, S1, PP, R2, R2, R3, etc. Is that accurate? You were a bit on the floor there, Pete. Anything that you remember on that front?
Medhead, I love you, but what floor traders? Is there a trading floor I don't know about? Obviously, he's talking about guys who used to trade on the floor and are off floor now. I don't use any of those pivot points. I find that the more crap I put on my chart, the more obscured it is. And if I just have 1OP, VWAP, and the price, that's all I need. I do use 1.0 volume because I do like to see where the volume is coming in. That is all I use. I'm such a plain Jane when it comes to trading, but I've learned to really get good at it.
I mean, look, also every one person's S1 and R1 is not a different person's, S2 and R2. It's, you're looking at your first support, your second support, your first resistance, your second resistance. Some people are the previous day's high and the previous day low. That's going to be my first support and resistance point. Now, this trend line here is the second one. SMA is the third one, and so on. And you can drill down and drill down. My only issue with anything, well, one, cluttering up your charts. You don't want to do that. But two is, in order for a technical analysis support, because all technical analysis really boils down to is correctly identifying support and resistance, right? That's what it boils down to. And in order for that to be applicable to your trading, it has to be consistent, right? So you have JPM, you have Goldman Sachs, you have all these different institutions out there. And some of them there are some consistencies, right? The 50 SMA is the 50 SMA no matter where you look. And VWAP and these are all going to be consistent. But some are arbitrary or subjective, like what are they going to choose as those pivot points? What are they going to choose as the S1, R1? And unless there's consistency across the board, it's not going to help you in trading. So what you're trying to identify when you're looking at support and resistance is really what levels are institutions going to stop selling? What levels are they going to stop buying? What levels are they going to start selling? What levels are they going to start buying? Then you look to see if that is confirmed through the price action, and then you move forward with your trade. Unless it is a consistent across, you're going to start seeing mixed messages. So MedHat is right, as usual, that they do use that, but not that there's floor traders. I think that's just a colloquial term, but it's not consistent across institutions, so it becomes not as practical for you as a trader.
Back in the good old days, the floor traders, they did not have a lot to really go off of. They were buying bids and selling asks as much as they could. That's what floor traders did. Some of them would do their own line charts at the conclusion of every 5-minute period. So they at least had something to look at on the floor. They didn't even have any charts. So it was very hard for them to follow what the previous price action had been. But the good ones knew what it had been, and they paid attention to who was buying and who was selling and in what kind of size. And that's what they would base a lot of their decision making on.
Indeed. All right. Let's see. Is there anything else out there?
Did want to make a comment. So
Yeah.
you come in, you see this rally. Oh, it's strong. We're at a new all-time high. Ooh, this thing looks like it's going to roll over. It looks like it's going to roll over. I have a bearish 1OP cross. I think I'm going to short in here. I think I'm going to short. When we started this live event, I specifically said the only trade that you would want to take is on the long side today. This is a bullish trend day. You do not even think about the short side. And so this move right here, I may not have caught it, but I didn't fade it and I didn't lose money because we did have this bearish cycle here. I was looking for the market to drift lower, but I knew better than to short this kind of a move. And so as it's starting to creep up to the previous high of the day, I still have 1OP drifting lower. No, I didn't catch that breakout, and I don't want to catch that breakout. But I avoided a very costly mistake because that is probably 527.40. So you got about a 15-point loss in the S&P 500 if you try to get cute. So don't get cute. Don't try and trade these little pullbacks. Keep your eye on the ball, which is buy the dip, buy the dip, buy the dip.
This is also where future traders can get their asses handed to them. I mean, it really, there are certain things that you have to ask yourself, what is your staying power on a trade, right? And future trades can move really fast, obviously, as we know. So, let's just say right now you're long ES and you get a market pullback. All right. How confident are you to stay long? Are you going to take the loss where? Are you going to take the loss at the bottom of the previous green candle here? If SPY hits 528.66, is that your line in the sand? Are you going to take it right before this breakout down here at 528.10? You really need to have in your mind, how long am I willing to ride this position, particularly if you're looking at a futures trade? Because if you went short futures too early, as we were talking just before, at that SPY breakout, at what point do you bail? Did you bail at the end of that first 5-minute candle, maybe at 528.40? Now you're at 528.66. So let's say you just bailed out on the last green candle here and you bailed out at 528.77. Now you're starting to see a little pullback on this candle. Now you're cursing yourself. Damn it. I should go short. I'm going back short. You go back in short because you don't want to miss it. And then bam, once again, you could get hit with a reversal. So futures trading is very, very fluid, very difficult. You have to have a thesis. You have to know exactly when you are going to take the loss on the position, which a lot of people, the best one of the best titles of a trading book out there by Tom Hilligar is Best Loser Wins. And it's actually a really insightful title because one of the problems with traders is they don't know how to lose.
And so we're going to do a wrap here, and I'm going to look at the S&P, and I'm going to point out this little pullback right here that happened from 11:25 to, let's say, 12 o'clock. Okay, this little pullback, if you're thinking, I want to get long, I want to buy this dip, but I don't know, the S&P, maybe it tests VWAP. Harry just mentioned staying power. Very, very important for any trade. So I'm going to put up SMCI. I'm going to overlay the S&P 500 SPY. And you can see it's a little obscured here because this light gray line is the SPY. And we're going to do AVGO, Harry's pick, in a second. So look at the market pullback here. What did SMCI do when the market was drifting lower? Tick, 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 higher. So if I buy SMCI instead of SPY, and if SPY continues to drift down to VWAP, what is SMCI likely to do? It's going to hold the bid because we know institutions are in there like mad. Look at 10SI, positive the whole way. Look at the volume coming into this stock today. Unreal. Okay.
Same thing with Proud. Look at Proud.
That's my staying power. Oh, look, the market did rally. What did SMCI do? It led the charge. Since I highlighted it, it's probably up 12 bucks at least. So AVGO, let's take a look at Harry's pick. Not after the fact. He gave this to you real time. So here we are at 1404. Stock's up at least 8 bucks. Same deal. Market pulls back. Stock is holding the high of the day, doesn't even budge. As soon as the market finds support, it's like throwing gasoline on the fire. Stock moves higher. That's why we trade relative strength. That's why we trade stocks. We're not always going to get the market wrong. Having the strongest stock, the fastest stock, that's the cushion. That's the edge that we trade. So, all right, I think we're kind of wrapping up.
By the way, Crowd's another example. I mean, that is, we do this illustration all the time, right? We do this constantly. Is showing if you bought the index, SPY or QQQ or ES or NQ or whatever your future, however you're playing the index, right? Compared to buying the stock through the stock itself or options, that is relatively strong or relatively weak. And we show time and time again what side by side the difference is. And you will be very hard pressed to find a time when buying the index is going to outperform going long on a relative strength stock or short on a relative weak stock in comparison on any time frame. You're just leaving money on the table. If you think SPY is going up and you want to go long SPY, go long the relative strength stock. If you think it's dropping and your thesis is it's going down, go short the relative weak stock. You're going to make more money because if you're right and this SPY does drop and you say SPY is going to drop, I want to short SPY. Oh, but look, this stock is relatively weak and you short that stock, guess what? You're going to do better because by definition, that stock is going to outperform. SPY drops this percent, that stock's going to drop more than that percent because it is relatively weak. So very rarely are you going to have a time where you're going to say it was better off buying the index, better off shorting the index. Very rare.
Yep. And Crowd, beautiful. You can see market rallies up, stock starts compressing because it makes such a big move early that it's not just going to keep going into perpetuity. It's going to have a little bit of a pause. So when the market is pulling back, you can see the stock is actually starting to move higher. It's regaining its relative strength here. If you had right-clicked and you came in early and you said, hey, I really like Crowd today, so I'm going to create an alert. I am going to go into relative strength weakness, and I'm going to select that. And when the stock goes strong versus SPY M5, I want to be alerted. Well, it's going to know that it's strong relative to SPY. When you set the alert here, it's going to wait for it to go negative, and then it's going to wait for it to go positive right here. That's where you'll get your alert. And lo and behold, the market's starting to come out of its dip, and you're in here at a new high of the day. See you later.
Perfect.
All right. Harry, thanks
everyone.
so much. Just a quick note, next week, we're going to have to do our live event on Tuesday. So please make note of that. Harry, does Tuesday work for you?
I'm sure it does. Let me take a look here real quick. Next week, next Tuesday, Yeah, I'm good. And actually, I'm even better because next Wednesday doesn't work for me because my son's pre-K graduation is next Wednesday.
All right. Well, awesome. That's an important event. You don't want to miss that. And I got
Not
stuff going
tomorrow,
on.
Nope.
Yep. And after next Wednesday, I'm going to take a week off. So I will see you I'll see you Tuesday. I'll do my recording on Sunday. We'll see you Tuesday for the live event. Thanks so much for attending, everybody. We'll see you then.
All right. Thanks, Pete. Bye, everyone.
Thanks, Harry. Bye now. You too.